Let me introduce Mr. C.A. Ramesh Dave. He is a qualified chartered accountant, company secretary, and certified AML specialist. He has over 23 years of post-qualification experience and he has worked in various positions in the areas of internal tax credit and system audits. He is currently associated with Abu Dhabi Chapter for the last few years and has been part of the managing committee in the ICAI Abu Dhabi Chapter. As a committee member, he has played a key role in organizing various events for the chapter. We are very happy to have you as a moderator for our next session on regulatory compliance and AML. Please invite you on the stage.
Hello. Hello. Yeah. Is it audible properly? Thank you. So good afternoon, everyone. So now we have a very interesting session on regulatory compliance and financial crime. So some time back we were talking about the compliance cost, and it is said that if you think compliance is costly, try non-compliance, and you know the result. So integrity is doing right thing even if no one is watching. So at the first place, if we can get compliance right, it is actually in one sense a byproduct of doing things rightly, and it takes more than 20 years to build reputation and just 5 minutes to ruin it. Ethical and compliant businesses in comparison to non-ethical or say non-compliant businesses can better mitigate the risk of legal or regulatory sanctions and ensure avoidance of any material, financial and reputational loss. In recent past, the regulatory requirement for compliance assurances, policies, AML framework and international sanctions regime have increased the need for maintaining an adequate compliance framework for most organizations. Laws continue to be enacted. The regulatory environment has become more complex due to unacceptable conduct remediation. Consequently, entities continue to be compelled to ensure and demonstrate more compliances. Due to the increased number of regulations and need for operational transparency, organizations are incredibly adopting the use of consolidated and harmonized sets of compliance controls so as to ensure that all necessary governance and compliance requirements can be met as required by statute or in accordance with the international best practice. Friends, you may know, in March 22, UAE was added in the grey list. So grey list is actually for the jurisdiction which are under increased monitoring by Financial Action Task Force. So grey listing is typically applied to countries with gap in their anti-money laundering or counter financing of terrorism, the financial crime, but where the commitment has been made for swift resolution of these gaps. So FATF carries out this mutual evaluation of their member countries through a peer review, and they conduct assessment based on key focus area for prevention of anti-money laundering, terrorist financing and financing of proliferation. So regulated financial institutions and designated non-financial businesses and professions should expect increased scrutiny from regulators, and as a result you would see that UAE-based businesses are already experiencing increased questioning from global institutions on their transactions, source of fund, so on and so forth, and this will continue to grow. However, it should be noted that UAE has demonstrated significant progress and commitment at the highest level in fight against money laundering and financing of terrorism, and FATF has recognized it. So compliance, although it encompasses all the activity of the organization, but it starts at top. We have to set the tone at the top, and therefore the board at the helm of affairs need to set up a culture in the organization, and they should set up a strong compliance culture within the organization. Compliance should be integral part of any activity of the organization, and it should not be just responsibility of the compliance staff as say, but with all, it's a shared responsibility between everyone. So compliance is everyone's responsibility, and strong compliance culture is a prerequisite for effective compliance framework. You would see that in last year, 2021, Central Bank of UAE has issued several regulations, and for banking sector particularly and insurance, and this makes the life difficult for many organizations because you need to really, it poses significant operational challenges currently, and in order to comply, some bank either have to adopt to a new system or revise their existing system to make the compliance organizational functioning. So now CBUA has already shown that it will not hesitate to enforce its AML requirement. So enforcement has always been something which was weak, but now you would see that Central Bank has already fined 12 banks and 6 exchange houses only last year. And to date, banking sector has been the most directly impacted, but there are other professional and other business houses also which is facing the heat. So we have our expert panel today to discuss on this very important and crucial aspect of financial crime and regulatory complexes. So let's hear from them, because the quality of compliance is a fundamental building block for entire regulatory and compliance framework, including customer risk assessment, customer due diligence, sanction screening, or transaction monitoring. So on behalf of ICAI Abu Dhabi Chapter, it is my honor to introduce our eminent speakers. So first we have Mr. Amit Kesari, who is also a chartered accountant and MBA from IE Business School, Spain, having 20 plus years of experience. He has been a university topper in Bachelor of Commerce. Amit has worked in India, Bahrain, UAE, in corporates such as Tata Steel, ICICI Bank, First Abu Dhabi Bank, heading various positions in the field of management accounting, financial control, regulatory compliances, and compliance operations. Currently, Amit is working in Bank of Baroda UAE as Chief Compliance Officer and going to share his thoughts on regulatory compliance. May I invite Amit on the dais? Welcome. सीट ले लीजिए, मैं बुलाता हूँ. या तुम अभी बोलोगे? So next we have Mr. Alok Gupta, who is a seasonal financial services professional with 20 plus years of industry experience across financial crime, innovation, data analytics, risk management, wealth management, and business transformation. He has worked in multiple jurisdictions including UK, India, US, and Middle East. Alok holds several leading industry certifications including CFA, FRM, CAMS, and BTech from IIT Kanpur and GMP from IIM Ahmedabad. Alok is highly passionate about technology as an enabler, artificial intelligence, blockchain, machine learning, data monetization, and he is going to share his thoughts on AML. So may I request Alok to please come on the dais. Welcome. And we have Mr. David, who is Head of Compliance at Commercial Bank International. David's hold a triple master's degree and a postdoc obtained at various Dutch universities, among which he holds an LLM in business law and executive masters in compliance and integrity management. David has 20 plus years of experience in all areas of compliance with a focus on financial crime compliance gained in Europe, Latin America, and MENA region. His strengths are to build up compliance teams consisting of multiple cultures from scratch to best in the class. David is going to share his thoughts and experience in the area of sanctions regime, where he is an expert. So may I invite David and join us on the dais. Thank you, David. Thank you.
There you
go. So we have the mic here, right? Yes. Amit, you can start with. So thank you guys for joining, and it is our good, great fortune and privilege to have experts like you for addressing our members. So to start with, I would request each one of you to give an introduction about your specialized area. To start with Amit, I would request him to speak about regulatory compliance in UAE particularly.
Thank you, Ramesh, and good afternoon, all. It's a great privilege to be in front of you and to speak on such a relevant topic as compliance. So I'll share my thought on the regulatory compliance. Now, regulatory compliance is a framework through which organizations aspire to comply with the regulations which are applicable in them. Now, generally, whenever we say compliance, regulatory compliance, say, banks, insurance, exchange houses, etc., are most visible. But the fact of the matter is that most of the organization, whether it is like restaurant, educational institution, construction industries, infrastructure, everybody has to comply with certain regulation. So regulation is a like core portion of everybody's business. Today also in the morning we have heard Mr. Shekhil where he was talking about ESG. So regulatory compliance, I would say, is a framework through which the organization have to comply with the relevant regulation. It is applicable to most of the organization. Now, most of you are from finance background. So one of the example can be for you is the audit preparation, financial statements, publication of financial accounts, calculation of certain ratios, etc. So these all are part of the regulatory compliance only. Now, I'll just describe you the regulatory compliance framework which we have in the UAE. So first of all is the regulator or the agencies under which you are. For banks, it is Central Bank of UAE. For others, it's different. So first, we have to find out which are the regulations which we have to comply with. Obviously, second will come as the policy. So the organization have to prepare the policies according to the regulations. These policies will become the overarching principle according to which the organization has to work. Now, policy is just a statement and it has to actualize itself. So for that, the first line of defense or the front line, they have to prepare standard operating procedures, the SOPs, through which they can actually do the stuff. So that is the second portion it will be. Third is system. They have to have certain system through which the processes, the transaction can happen, because manual transaction often delays the thing and there are inaccuracies involved. So the regulatory compliance to be more effective, there should be systems. Further, there should be training and awareness given to the first line of defense or the front line through which they are aware that what are the regulations they have to comply with, what are the processes they have to do and how they have to do, so that the compliance portion is effective. Lastly, there should be assurance or some kind of monitoring. It has to be done by the second line of defense or compliance or risk management, where they should, or internal audit, where they should see what are the processes they have to comply and how the compliance is going on, what are the gaps, and if there is a gap, they have to monitor it. So this is overall framework of the compliance.
Thank you, Amit, for giving a overall framework of regulatory compliance. So obviously we will go into the next area, but at this place I would like to ask one question which is very relevant to most of the people, is that as we do onboarding of the customer in the bank, there is a identification of UBO, which is ultimate beneficial owner. And many times, we have got feedback also from members that it's very difficult because there is no a clear-cut guideline as such, which tells, how you basically go and to what extent you go and do the identification of UBO. So how do you, suggest that how they can, understand and also provide the information, because sometimes it becomes too complex to go to their parents and obtain the information to be submitted to the banks.
So, Ramesh, it's a quite relevant question, and in today's scenario, when we have to, as a bank, when we onboard a legal entity, where we have to understand which are the people behind it. Because when we onboard an individual customer, we can identify him through the passport or the Emirate side. But a company is what the UBOs are. UBO's character will define the character of the company. So, as per the regulation, we have to understand who are the people behind it who are owning more than 25% or more. But it depends upon also the risk appetite of the individual banks. There are banks who are identifying lesser than that. There are some banks who identify up to 5% or more. There are some 10% and all. So it entirely depends upon the risk appetite, but the central bank says that we should identify the people behind the entity, 25% or more. In case of entities which are listed in a recognized stock exchange, we can rely on the fact that they are regulated or they are listed in a stock exchange. So we can take comfort and we may not drill down. But obviously, how to find out those people behind it is through trade license, through the memorandum of association. Sometimes it is very complex because there is a web of owners. So in that case, we can take the attorney's certificate or the auditor's certificate.
Sure. So it need to reach to the individual level where, basically we need to identify who pulls the string, and then we reach. Thank you. So coming to Alok, in the area of AML, first of all, I would like you to, tell our members about, the general framework of anti-money laundering here in UAE. What are its, core element, and basically what are the emerging trends and how we can, understand, and obviously few of them from banking perspective, but most of them are actually business houses. So how it impacts them as well.
Thank you. First of all, it's my true privilege to be here in front of such a prestigious audience. And thank you, Mr. Ramesh, for inviting me to share my thoughts on such an important topic. And given the vast topic around anti-money laundering, which is much more global in nature and not specific to UAE, I would not claim to be an expert, but I'll definitely love to share my thoughts, my experience, my knowledge, and emerging trends in this domain. Having worked in financial services for almost close to 20 years, financial services play a very important role in building or breaking economies, societies, and individuals. International finance system today, as it exists, if I can compare, it's a two-edged sword. When used well for its intended purpose, it can help economies to prosper, it can help businesses to connect with opportunities, and it can help individuals to achieve their dreams. But when these financial systems are misused by bad actors, it can break the the very model of humanity. The money which is laundered might not impact you directly, but it does impact directly or indirectly almost everyone. And when I talk about financial crime or money laundering activities, these are the activities which support criminal activities financially. So activity itself is not a crime, probably, or from a layman perspective, but money laundering is supporting an underlying criminal activity. And they are cross borders. They betray communities, they betray the trust among us, and steal billions, if not trillions of dollars from people all over the world. Broad estimate globally is that money laundering impacts 2 to 3% of global GDP. That's trillions of dollars, to put in perspective. And most importantly, if you take the example of money laundering coming from human trafficking, from wildlife trafficking. It impacts us, by all means. And addressing the true human and economic impact is a challenge that requires commitment, constant commitment and collective action from all of us. We might be in financial services or not, and it's not the responsibility of only financial services or central bank. It's a collective responsibility. I think Amit was talking about that regulatory compliance is cut across everything, every business, not only financial services. Same stands for money laundering and financial crime. Criminal organizations rely on interconnected and international financial system to support their illegal schemes, and they exploit these various means to move their illegal monies without detection to enjoy the proceeds of that money either for their own luxuries or to commit another financial crime or to commit another crime. It could be terrorism financing or it could be anything. And proceeds of crime can originate from number of ways. It could be proceeds of bribery and corruption. It could be organized crime. I spoke about human trafficking, wildlife trafficking, child exploitation, tax evasion, cybercrime, terrorism, ransom, proceeds of drugs, sanctions evasion, and I can go on. These are all criminal activities in most of the jurisdictions. But what happens to the proceeds of the money or the income or the gains which come out of these activities? And that's where those criminals and launderers, they try to launder the money. And in simple terms, if I can define money laundering, it's like laundering our clothes. What do we do when we wash our clothes? We make them from dirty to clean. And that's what money laundering is all about. It's a laundering of dirty money to look like a clean. And globally or traditionally, money laundering, including UAE, has 3 steps. One is the placement of money. Second is the layering of money. Third is integration. And that broadly defines the framework. Placement is the first step, where the proceeds of a financial crime or dirty money, which the launderer cannot disclose, is placed into the financial systems and can use various means. It could be as simple as structuring the cash into smaller deposits so that it doesn't get detected beyond a certain threshold, or probably deploying thousands of money mules to transfer the money across borders to look like legitimate, or probably paying or buying against fake invoices, against fake goods and services. That's the very first step of placing the money into financial system. And the next step is layering. Layering is all about increasing the distance between the source and the destination so that it becomes difficult to trace that where the money came from. And layering is, and one of the big use case of, not use case, but one of the big means of doing is a trade-based money laundering, where money moves across countries, across borders to increase the proximity from the source. And the final is integration, where the finally laundered money, when it comes to the financial system where it looks clean, is invested into probably legitimate business. And most of them are already a high-risk business, like real estate, or minerals, or luxury businesses. And these 3 steps broadly defines AML framework, and it starts with, first of all, the very first step is assessment. As I said, every business is impacted. We need to assess based on the kind of products we offer, the kind of customer we onboard, the kind of industries we deal with, the kind of services we offer. Do they have a potential of money laundering? Do they have potential to commit financial crime? Will I be exposed to that or not? So very first measure is assessment. Depending on the assessment, we need to define our KYC or CDD policy that do I know my customer well? Do I know where my customer underlying business activity is coming from? Is what my customer saying really makes sense? If my customer is just a driver and if he says my income is 20,000 dirham, does it really make sense? Probably not. Asking the very basic questions. That's all about doing customers. And the third step is, so once I have assessed my risk, which might emanate from the kind of product I offer, the kind of customer I onboard, then if I understand risk associated with them and I know my customer, third step of AML framework is monitoring the underlying transactions. My customer at the time of onboarding said, okay, I expect cash deposit of 20,000. Is that really happening? Or am I seeing cash deposits of 50,000 every month? Where is it coming from? Yes, it might be legitimate, but as a entity, we need to understand because we are providing a connection or connectivity to international financial system where this money will get ingested and will look like clean. And the transaction monitoring is quite a heavy piece where we as banks are held accountable if we don't monitor and report suspicious activities. The good part is, it's not that bad. Most of the customers are good. I would say more than 99% activities, transactions look good. It's just that less than 1% transactions, which are suspicious, which emanates from criminal activities, and that's what we need to monitor. We in Middle East, especially in UAE, we have an advantage of, I think, some of the previous speakers spoke about geographical location where we are connecting east to west in Africa. We position ourselves as trading hub, and trade itself has a significant exposure to money laundering risk because of the very nature of it. There are multiple parties involved, which makes it very difficult to truly understand underlying transactions. There are multiple international borders involved, multiple currencies involved, multiple documents involved, which makes it very difficult and makes it easy for money launderer to use trade to do money laundering. And that's one of the big risks we live with in UAE being a trade hub. So we stop trading? Definitely not. But we are expected to monitor it. Second is, probably UAE is still one of the countries, despite all the digital everything, we are relatively heavily cash, we have significantly high cash uses. That's additional money laundering risk. Third is, I would say emerging side is the rise of crypto assets or digital assets, to put it in a wider category. Bitcoin can still be tracked, but there are many assets like Monero or Dash, they just can't be tracked. Now, it does not mean someone is buying a Bitcoin is committing a financial crime. What matters is for what purpose the person is dealing in those cryptocurrencies. To summarize, I think watching the movement of money is everyone's responsibility. Knowing our customer is everyone's responsibility. And to ignoring it is a crime. In the eyes of regulator, providing a platform to customers or anyone to integrate the money into financial system is a crime, and we are penalized for that. And that's a collective responsibility we all need to hold together.
Thank you, Alok, for providing a wonderful framework about the anti-money laundering globally, obviously, which is also applicable to UAE. And thanks for explaining the money laundering cycle. And obviously, it's a a big financial crime. So obviously, compliance risk is the risk of legal or regulatory sanctions, fine, which may bring to reputational loss and even the material and financial loss. So from David, I would like to understand that what are regulatory sanctions, about the current regulatory financial sanctions regime, and how do my business ensure that I am not dealing with any blacklisted or sanctioned guys, so that I avoid the risk of sanction?
There's a lot to be said about how financial sanctions should apply. It's not something that only pertains to banks or other financial companies. And there's a common misunderstanding that it's only a financial institution's task to actually scrutinize whom they're dealing with. I'm sure that you also work with a lot of most of you work with non-financial companies.
Yes.
And sanctions regulations equally apply to them. The controls, the set of controls that you have might differ. So let's just take it as an example. The current conflict between Russia and Ukraine.
Yeah.
So what does that mean to the UAE? Now, if you listen to the governor of the central bank, they say, well, we take a neutral position in the in this conflict, so we strictly adhere to United Nations resolutions to the extent that they issue sanctions. But obviously, Russia is a permanent member of the Security Council resolution, so they'll block any decision making there. So I haven't seen much UAE regulations on that front. Nevertheless, as a bank, you have to look at it more holistically, simply because if you do foreign currency business, for instance, if you have to dollarize your payments because you finance international trade, it will go through US bank and they will assert jurisdiction over the transaction, which means basically you also de facto have to adhere to US laws, and they are very serious. On the sanction side, once you have, you send even $1 to a loan counterparty, you will hang, even if you are a UAE bank. So that's it's as serious as a heart attack. You can't really, allow yourself in any industry to not understand sanctions. So, for instance, if you work in an industrial company, you will have to thoroughly scrutinize your counterparties. You might do international trade. Let's assume you have traditionally done trade with Russian counterparties. Do you actually know where they are located and whether they are designated under sanctions? They may not be designated under UN sanctions, but it may be designated under sanctions regime. Do you, screen them? Do you screen your business partners? It's a very simple question. No, there are multiple ways of looking into whom am I dealing with, just in the same way as banks have to know their customers and their customers' customers, the flows, the counterparties, whether that business makes sense, all of that. So we have seen, I work at the bank, so we've seen quite an uptick in sanctions related work as a result. I'm just highlighting the recent conflict. I just looked it up recently. You know how many Russians have visited the UAE this year so far? 444,000.
Wow.
Not all of them went back to Russia. So it's estimated that around 10 to 15% of them stayed. They need to live somewhere, so they might buy houses, one or two. How do they pay for them? Because in Russia, there is a local regulation that prohibits money to exit through wire transfer. They're disconnected from SWIFT. So they bring in cash. And most likely they haven't declared it. Maybe it's somewhere stuffed in a duffel bag when they came. Those are paid at the real estate agent that tries to sell them. There is a law that states that the real estate agent needs to perform, look at where the money comes from, whether it's earned in the right way, declare it if necessary. I can say to you, hand on heart, on the basis of my 10 years in the UAE, I know a lot of these real estate people. Some of them are among my friends. I always ask them, how many sales did you file this month? They don't even know what it means, the word suspicious activity report. So I think there's a long way to go. Although on paper they're all, regulated, it's another thing whether it's actually being enforced. And I think there's some way to go for our regulators in the UAE to actually start finding inadequate controls there. So, and that also happens with non-financial companies. I mean, those who are industrial companies that may be active in certain industries that may transport goods that are highly sophisticated, maybe even dual-use nature. Do we know whether those goods that we export to specific countries, whether they are licensed, must be licensed or not? So I think that there's a lot of compliance is pervasive everywhere. It's no longer something that financial institutions should look at. And our regulator is starting to enforce left, right, and center.
Interesting, but I have one question, David, that why, despite numerous fines of billions of dollars across the world, criminals are still able to get away with, money laundering, and so what
In
are
the UAE or just globally?
it's global problem. Obviously, UAE is included as such. So
it all depends on your controls and how you enforce them. I think we're sending sometimes, to me, I'm not sure about the rest, the other panel here. It would appear to me that sometimes we're sending contradictory, information because we want to be portrayed in UAE as a very tech-savvy digital environment, easy for business. But the flip side of that is that you need to also enhance your level of controls, and that does not always happen in a commensurate way. So I think there's a lot of work to be done, especially on the non-financial side, real estate agents, maybe dealers in goods that are of high value, cars, or maybe car salesmen are not part of that. I have to check. Lawyers that basically sit on escrow accounts. If they don't ask the right question, what's the source of funds? What's the source of wealth? Basically, a lot of dirty money continues to enter this economy. And, as I said, if the controls are not there, financial criminals will always try to find, the easiest way, where the controls are weakest. And that's what we're currently seeing. I think that the non-financial industry, what we call that non-financial designated non-financial businesses are the weakest link here.
Yeah.
But maybe that changes in a year now.
Sure.
I expect some hefty fines soon.
You would like to add something?
I think just to add on to David, I think one of the reasons why they are able to get away is the complexity of financial system itself, and also more for the reporting standards, which vary differently from jurisdiction to jurisdiction. And there are still some jurisdictions which do not cooperate heavily into AML investigations. So a good example is, let's say, Bank A files a SAR that there's suspicious activity going with this customer. Bank B does not know if Bank B is also dealing with the same customer. And Bank A itself, they don't know what should they do. Should they exit the customer? Probably not. Because if they exit the customer, they might be tipping off the customer. So customer can still continue to transact with all the banks, and by the time the regulator come back, probably to ask to exit the customer, it might be a couple of months. Customers would have already laundered all the money and went away. So holistically, the regulatory framework has a lot more to improve in terms of communicating, in terms of the two-way feedback loop between the SAR filing entity and the regulator, who further works with CID, FIU, central bank, and multiple regulators to decide what needs to be done. And it's just a delay in the whole framework, which gives sufficient time, and those people, those criminals know, they know the gaps, they are ahead of the game. So it's just, I think, probably it's a matter of time, I would say, until that communication channel improves, it's going to be challenging.
Sure, definitely. So,
Can I add one tiny thing? I think that what you stated, Alok, it's really spot on. That what we're trying to say in very politically correct terms is basically that our regulator is still not up to standard, while they have done a lot of they've improved a lot. And as you mentioned also, Ramesh, the fines that were issued during the past 2.5 years on a number of financial institutions and exchange houses, you've also seen that since those exchange houses started to be scrutinized in a more robust manner, it has halved the number of them. I think in 2017 they had 142 registered exchange houses. I think it's now less than half. So there's been a shakeout as a result of, increased pressure on getting the controls right.
No, definitely. So as rightly said, that the regulators are enforcing now, and there is a fine. There is meaning, as you see that globally also there have been so many financial institutions which has been fined, and that's one way of curbing the financial crime problem. So just for the sake of we have a lot of questions, but as I can see the time is running, so probably we can take maybe couple of questions from audience, one or two. And then if there is any, and then probably we can summarize. Any question from member side?
I think people are really hungry.
Yeah. So I would actually like to extend my thanks to the eminent speakers here, coming and giving your valuable time as well as the knowledge on the subject. So as we know that this area, financial crime, is very, very crucial for the country as such, and there is a constant monitoring required, not only at the side of the financial institution, the banks, but also at the business houses, which they need to ensure that to whom they are dealing with. That solves a lot of problem. So as you rightly said, the placement comes very, very important. So you establish relationship and then do the transaction monitoring, but before that we need to put the things right at the initial stage. So if the business houses takes the responsibility of doing things right, then I think, as you rightly said, that 99% there is no issue. It's only 1% which creates a problem that also can be resolved. So with this word, we will conclude here for the sake of time, and again would like to thank you for coming and joining us. Thank you.
Thank you, and compliment all the panelists for their valuable time. Thank you our own moderator, committee members, C. Ramesh Dave, for an interactive. Mohammad Al Khatiri, Yogesh Bansali, member of ICAI Abu Dhabi Chapter, and Rajesh Reddy, the committee member, for the memento, please. Thank you, Ramesh. Thank you.